What is up, everyone? Nick here. Welcome to the show. If you're new, thanks for coming back. If you're not, we are witnessing the continuation of the bull sentiment in the electric vehicle space. A lot of people online were fast to abandon the industry as a whole during the steep correction in February and March and the ongoing undulations in just the past few months. I was receiving a lot of flack for my continued bullish outlook. People said I was crazy, the stock was doomed, blah, 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 blah. Nothing us NIO longs have not heard for more than a year now. The stock has recovered substantially since hitting recent lows in mid-May. We've bounced back around 40% in valuation in just a matter of weeks, and we've shattered another key resistance line just today. We have a lot of news emerging on the stock, and we have a jam-packed episode today, a lot of movement. We're also going to be talking about where shares could reach in the coming few weeks and just how long this bullishness could persist for. Before we get it today, make sure you check out Weeble's promo, 2 free stocks worth up to $1,850 for free. All you have to do is use the link in my description. We all know the early bird gets the worm. You do not want to miss out on this deal. Who doesn't like free stocks, especially stocks worth up to almost $2,000 for free? Okay, let's jump right into it, folks. So shares on the day are sitting at $43.68, up $1.74 on the day, a 4.15% climb. We have seen the continued surge of this stock the past few weeks, with no immediate signs of slowing, up around 40% since recent lows. I was unsure of whether the valuations would break the resistance line that we had experienced around the $42 mark. However, a few catalysts were enough to forge the stock ahead. NIO is also climbing its way back up the automakers by market cap list, now occupying the 8th spot once again. So before we get into NIO news, I want to first talk about why shares surged. Will this continue? If we know one thing more than anything that shoots share prices up, it's analysts' upgrade in bullish coverage. I've talked about this before, and I personally think it's crucial to get in before these stock analysts flock back to maximize your ROI. And sure enough, we are seeing more analysts return to favor this company, and resultingly, their share price surged. We recently had Citi raise their price target with a buy rating on the stock, which shot shares up last week, and now the latest analyst to jump on the bandwagon is the familiar Edison Yu at Deutsche Bank. I've talked about Yu frequently on this channel. He really is a NIO bull through and through, and we have seen what he's able to do for NIO's valuations on even a reiteration. Edison Yu and his team at Deutsche Bank believes that investors are underestimating the ability of NIO to perform in the international market. We know NIO recently made their official announcement declaring Oslo, Norway, the world's fiercest EV battleground, as their first stop in the overseas arena. NIO has since announced that they are planning on launching campaigns in around 5 other European countries in the next year as well. For Deutsche Bank, they see this as currently underappreciated by investors and something that's not correctly priced into shares at current valuations. There's room to run here. Edison Yu states that, quote, "We think NIO selling tens of thousands of vehicles per year in Europe would be considered a success midterm, and investors do not give them credit for this at all," unquote. NIO has stated that they aim to sell 7,000 units in Norway in 2 years' time. However, I personally believe this is a vast underestimation. NIO management typically plays this conservative card and then drastically pushes over these figures. To put this into perspective, Lexus sold more than 7,000 units a few years ago before the EV frenzy in the country of France alone, without even having remotely close to NIO's software, their autonomous driving capabilities, and their broad services. Yes, Lexus does have the name recognition, but NIO is rapidly becoming a household name firmly intertwined in the EV space. We are actually seeing an increased amount of consumers move into an EV-specific company rather than an OEM company moving into the EV space. This may be why Tesla has performed so well. Yu and his team have reiterated their buy rating and their $60 price target on the company, indicating a potential upside of around 30 to 40%. These are extremely enticing yields, which sent investors into a frenzy on shares. We once again saw NIO outperform EV daddy Tesla on the day, which has been an ongoing trend the past few trading periods, and I'm very optimistic this investor interest will continue for the next few weeks and for a number of reasons of which I'll get to shortly. Now, how and why is NIO going to be able to carve out market share for themselves within Europe? Well, Yu believes that they are essentially building an optimal integration of services in comparison to their other competitors. This is key, their integration. Let's focus on this. They are a high-end luxury company fusing with high-end technology, which is really drawing in the Chinese consumer. NIO, being a luxury company, are able to use cutting-edge technology and implement some of the best AI and autonomous driving tech across the globe. This is something they see as completely necessary and something that will allow them to win the race in China. But for Deutsche Bank and Yu, it really comes down to their holistic charging approach. They are offering their signature battery swapping charging stations, their supercharging ports, their regular charging ports, home charging, and third-party plug and charge. This is drastically minimizing the main deterrent from purchasing an electric vehicle for many consumers, in Yu's opinion. It's something they're doing better than the rest, and mileage anxiety through NIO's broad charging methods is becoming a thought of the past. Now, Europe doesn't currently have any pre-existing battery swapping infrastructure, so NIO will have to build aggressively, broadly, and quickly in order to service the Norwegian market, similar to their rollout within China, which clearly worked wonders. Deutsche Bank states that if NIO is able to facilitate their branding appropriately and continue serving their customers in a superior method than competitors, they should be able to carve out market share from some of the weaker legacy brands who are only now moving into the luxury EV space. Essentially, they're late to the game. Now, we need to also remember that unlike China, which is quickly becoming oversaturated with startup electric vehicle companies, Europe remains really open, almost completely dominated by OEMs, or legacy companies, which serves as a very unique opportunity for NIO. They are rapidly becoming a chic, sleek, and modern company to be reckoned with, and I do think their branding and image will go a very long way in the European markets. We do know the European consumer is already comfortable with purchasing MIC or made-in-China vehicles. We see Tesla exporting tens of thousands of MIC units to Europe, and other Chinese-based startup EV companies like XPeng have recently entered the arena as well. Consumers are actually beginning to associate China EVs with luxury units. Because of this, Yu believes that NIO could be selling tens of thousands of vehicles per year in the medium term, and does not think that this is currently accounted for in their shares, hence their price increase. We also know that NIO, at least for the time being, isn't planning on leaving the luxury sphere. Their newest project, codenamed Gemini, was previously speculated to being a low-end positioning vehicle, and this is no longer the case. NIO's senior director of corporate communications stated that Gemini will not be a low-end product and that the NIO brand will maintain its high-end positioning. Now, there is a lot of speculation that NIO is starting somewhat of a sidearm branch that will be positioned within the economy sphere. However, the brand name NIO will stay luxury. I actually personally think this is the right move for the company currently. I do not think moving into the crowded economy space is necessary until they have a firm foothold in the luxury sphere. NIO has carefully curated their image and their brand equity is really at an all-time high. They do not want to do anything that would damage this already firm reputation. There are better margins in the luxury space. We are seeing more consumers being able to afford luxury through battery and autonomous driving as a service, and paired with the subsidy programs, their vehicles really do fall in price. It really just makes sense for the company at this point, and I am pleased that they are staying within this high-margin luxury space. Now, moving to shares, I do think the stock could continue climbing in the short term. We do have a lot of coming catalysts, all of which I'm going to cover in my next video. I do, however, think we will stay within the 40 range for the next few trading periods. However, we will start to see the anticipation of NIO Day 2021 begin to materialize within its stock valuation. Along with this, we are going to have a massive Q1 2022 for the company. There are so many catalysts on the horizon, and I do think it is NIO's day to win. As I've stated before, I do not think triple digits within 1 year time is out of the question. It will be a rocky road. It is a very saturated market. There will be ups and downs, but I am extremely optimistic about this company, about their potential, and since day one, like I've been saying since $7 a share, I think this is going to be one of the biggest EV companies in the world. Anyways, everyone, make sure you subscribe. I'm going to be covering XPeng in my next video, talking about NIO's catalysts and where they could reach. I've got you all covered. Don't forget about the Webull promo, 2 free stocks worth up to $1,850. for free. All you have to do is use the link in my top comment. We all know the early bird gets the worm. You do not want to sleep on this promo. Who doesn't like free stocks? Webull is an unbelievable trading app. It really is a win-win. Anyways, everyone, I'll see you all in the next video. Take care. Happy trading. Cheers.